Hello, good morning, everyone, and welcome. Thank you for joining us today for our webinar on FedNow. Before we begin our presentation, I have a few housekeeping items to go over. First, everyone on the line is muted to limit disruptions. If you have questions, you're welcome to share them with us using that questions feature in your GoToWebinar control panel. If we have time during the presentation and following, we'll answer some of those questions together, but if not, our speaker and team will follow up with you after the webinar. Today's webinar is being recorded, and you can expect an email by the end of the day with links to the recording and the slides. And finally, upon leaving the webinar, you'll be prompted to complete a short survey. Please take a moment to share your feedback with us. We would love to know what you thought of our presentation and what other topics you would like us to cover in the future. At this time, I'm going to hand it off to Jason Keith, the Technology Risk Consulting Manager at Saltmarsh, to introduce our awesome speaker for today. Jason?
Thanks, Nancy. Good morning, everybody. Thanks for joining us. I'm pretty excited about the topic today, and I'm glad to see it looks like from an attendee perspective, we've got a pretty broad, diverse group today as well. So it makes me feel like this is something that a lot of us are getting interested in, wanting to hear about, wanting to understand. As a matter of fact, I think maybe 34 states or so on the call, $20 million to $200 billion from an asset size. So it's very interesting that this kind of runs the gambit of financial institutions, size. We're all going to want to integrate with this. We're all going to want to think about it. We're all at least going to spend some time and kind of say, what does this mean for me? What does this look like for me? Let me just kind of first step back and say from a Saltmarsh perspective, just so you can understand this if you don't know us very well, we're really just a group of former bankers primarily. We throw a few accountants in there for fun from the financial institution practice perspective. And we're passionate about the industry, and we're always kind of looking for what's the next thing we need to learn, the next thing we need to know. I particularly, you heard Nancy mention something about technology. I work specifically with our deposit compliance, our payments team, our technology team, and then our BSA team. And it's interesting that all of those areas specifically probably have some interaction with FedNow. As we step back and we think about how will this impact our industry teams there as we're looking forward to how to serve institutions. So I would like for you, Kevin's going to do a great job presenting. We're going to talk about him just a little bit. But when I step back and I think about the things that got me interested in this topic that made me want to maybe give pause and say, what is it that I want to be listening for and trying to learn and be thinking about as I consider where my institution falls in implementing this FedNow service? There's a few things that maybe I would stop and say, here's what I want you to listen for today. Kevin's not going to answer all these questions exactly, but here's what I want you to listen for today and be thinking about as you work through the next year or so and thinking about implementation. Think about, what would I put in my risk assessment to decide whether or not I want to do this, a pre-implementation risk assessment, you might say. What would I tell my board about wanting to go this route? What kind of pressure will I get to implement this service, even if I don't want to be one of the first 120 banks that, if you're in the pilot program and you're in the first 120, you've kind of made some decision there. But it's my belief, I think it's Kevin's as well, that at some point very soon, we're all going to kind of be drugged there pretty quickly, because I think that we have businesses, we have consumers, and both are wanting faster payments. It's just kind of the nature of the game. And Fed's finally kind of catching up on that. Frankly, there's been some other services and things that have been faster to that, but now they're catching up. They're working at implementing this. It's going to be a big service, big offering. Think about how sticky this kind of option might be for the younger generation. If we're bankers, we're thinking about, well, what about that cliff where I've got 3 kids, 3 teenagers, and they'd rather probably just use something that's an instantaneous, a Venmo, a Cash App, and you go through the list of things. It's hard. I'm always trying to preach to them what bank means, what FDIC insurance means, what coverage means. But it's one of those things that they just expect a fast payment service. And this is something now that you're going to be able to offer at some point pretty soon, or at least your competitors are, I think. But be thinking about now the other side, the risk perspective is operationally, what might I have to change inside my institution to deal with a 24/7, 365, I'm going to say the words that scare people, immediate and irrevocable type payment, right? It's something that's going to be an instantaneous type of payment, and you're not going to have those days to claw back. So you're going to have to think about operationally, how do I get comfortable with my clientele, with how they're going to originate this type of a payment, and how I'm going to stop it in advance. And then that kind of leads into, well, what do disputes look like? What's that going to feel like for me in this instantaneous world where I can't claw back? what third-party service provider, you probably aren't going to offer all of this optionality just on your own. You're probably going to integrate with your core, integrate with some other type of online banking service to offer some of these options. So what's that going to look like? How am I going to vet them? Who's going to be the best group to come in and help with that? And then really ultimately, when you step back and you think about it, if we're going to be asking clients, some of the Fed speak, I was listening to the head of the FedNow Service earlier just talking about fraud a little bit. And some of the speak kind of, when you cut through it, says we're going to have a lot of responsibility to educate our end user, because a lot of that risk may fall on them from a loss perspective in this world where a payment comes quickly. Now they're building fraud controls in. There's going to be some things coming out in 24. There's lots of focus on the fraud, but ultimately, in a world where something immediately becomes available, the same old fraud is going to continue to work the same old way. It's going to be a little harder to get some of it back. So all that said, Kevin, I'm going to turn it over to you. Those are just kind of my random wild thoughts there. But what I'd like to do is just acknowledge first that we're very lucky to have Kevin here. I think he's a great presenter, and he's promised me that he can do 3 things that I can't. He can look at chats, he can look at questions, he can present at the same time, he can run his own slide deck, and he can record the whole thing by himself. So that makes you an expert well above and beyond me just being able to do that. But Kevin, if you'd come in, we very much appreciate your time, and thank you.
Hey everybody, let me just say I am super excited like you don't know, just because of Jason's intro. I mean, I'm sitting there writing down all these questions going, I want to address every one of these questions, and I want you to know something. We definitely can. I won't say I will going through the presentation, but I will say we can, because we do want to make sure that any questions you have, put them in the chat. When we get to the end of the presentation, we will have a question and answer session then too. And I said then too, because if you got anything that comes up now, just let me know it. Now, our session today is get to know FedNow now. And you notice how the slides just were there, and then it's me. And it's the slides, then it's me. Just go ahead and get used to that, because one of the things I'm going to be doing is bouncing back and forth between the two. So you'll see the slides, you'll see me, and then you'll see me on the slides. Wait, what? I am Kevin Olsen. I am an AAP, NCP, APRP, CHCP, which is a certified high performance coach, in case you're wondering. And I am also the Senior Vice President for Payments Innovation and Strategy for a company called Pigeon, which offers faster payment solutions. I'm also known as the Payments Professor, where I'm all over social media. I have actually taken to Instagram. I thought I was too old for Instagram, but I'm instantly there anyway, like these payments that we're going to be talking about. One thing I do have to tell you before we keep going, though, is my jokes are bad. Oh, wait, I'll give you my opinion, and I have no filter. Yeah, it's not there. People said, hey, your filter's broken. I'm like, what are you talking about? It never got installed. But more importantly, I'm not an attorney, accountant, or tax professional. If you do have a question of a legal, accounting, or tax nature, please contact your own attorney, accountant, or tax professional. And I already said it, the jokes are going to be bad. Number one thing that we have to answer here today, and it's probably the question on everybody's mind, and it's actually, when I ask it now, a lot of people can answer it, and that is, what exactly is FedNow? Well, what is FedNow? According to the Fed, this is their official definition, this is a new instant payment service offered by the Federal Reserve banks to enable financial institutions, every financial institution in the US does require a US routing number, to be able to provide safe, efficient, instant payment services in real time, around the clock, every day of the year. What does it exactly mean, though, when we start describing it that way? I actually tell people these are like the Shakira of payments, any day, every day, all day, all the time. You can see these payments anytime, anywhere, as long as they're US based. I do got to say that it is domestic only. In fact, going into the characteristics, which Jason already hit on a few of those things, and it's important that we do cover those, let's look at them. Number one, it is 24/7, 365 access. Like I said, any day, every day, all day, anytime. You can have these payments processing. Does that change things? Yeah. In fact, if you're not aware, the Fed is moving to a 7-day accounting cycle. It's happening. It's happening soon, before the official release of FedNow, which is happening in July. Before the official release of FedNow, again in July, 7-day accounting is going to become a reality for financial institutions. What else do we see? ISO 20022 formatting. What's that mean to you? What exactly is ISO 20022 formatting? All right, you don't have to go get a programming degree. You don't have to get too technical on this. All this is the standard, the formatting standard, the messaging standard that is used that gives us the ability to be able to have these instantaneous payments. And they are one at a time payments. I got to stress that these are one at a time payments. We do not batch them. We do not put them in files. They are singular one at a time payments. Every time a payment is sent, we have immediate settlement that takes place for that individual payment. And the ISO 20022 formatting standard, well, that's what makes this all possible. In fact, ISO 20022, it's the same standard used over in that RTP network, which is extremely similar to the FedNow network. It is also the same standard that's used in a majority of the nations globally, 70 of them, that are offering faster instant payments. What else do we have to look at? There is an option to where you can be receive only. When you start looking at, oh, wow, sending payments all the time, anytime, I want you to know you don't have to send them. You can receive only. There is what's called a request for payment. Now, this request for payment is really important. Why? Because one of the main characteristics of this send and receive, these are credit push only payments. FedNow is a credit push only network. There are no debits, none, zip, zero, zilch. Well, okay, there is at master account levels for accounting and settlement purposes, but your customers do not have the ability to send a debit. We do have what's called request for payment, which, I mean, I love asking people this. When it comes to your dispute processing, anybody who does dispute processing, raise your hand if you love debits. You don't. Your debits are where all your dispute processing comes from. So instead of having debits, what FedNow has is a debit mechanism, not a true debit, a mechanism. It's a request for payment. It is basically a message that comes in and says, hey, would you like to send me some money? Would you like to send this to me? And so that message comes in and it allows people to be able to reply with a credit push because it's a credit push only network. Let me tell you right now, if I get my crystal ball of payments out, request for payment is going to revolutionize bill pay. I am telling people that I really see that you're going to see a change in the industry, and I'll bet the CFPB gets involved in this. They haven't yet, but I think they will, to where you will see going from a due date of when bills are due to a due time that bills are actually due, to give people the ability to be able to make the money, because look at the gig network and environment and what they do now in that economy. But to give people the ability to wait until the very last second to be able to make payments and get those through. Some exciting stuff here, okay? What else do we see? There are limits. There are limits. It's real important to understand that every system has its own limits. Now, within the FedNow network, it is an actual 500,000 maximum send limit that defaults to 100,000. Now, some of you might be going, I am not comfortable with 365, any day, anytime sending up 500,000. Well, that's why it defaults to 100,000. And I said sending, because you know what else you can do? You can set it even lower. You're not comfortable with 100,000, you can set it even lower. You want to set it per participant? You can do that too between your account holders. But I got to stress, you got to be able to receive that much. You got to be able to receive the 500,000. Some of you may be going, well, wait a minute, I'm not sure if I want to receive that much. Well, here's the beautiful thing about FedNow. This liquidity risk thing we got, it's gone. Why is it gone? Because immediate settlement takes place before you do that immediate funds availability. And yes, we do have to do immediate funds availability. I'll define that in a second. But immediate settlement is a key aspect of FedNow. Before a transaction is even put in the hands of the receiving financial institution, settlement takes place. So that 500,000, it's not a risk on the receiving side. You're going to have the money. It's guaranteed. It's going to be there. Other things we're going to see. There are reporting features and limits, and there is a liquidity management tool. And the liquidity management tool, that's important if you are going to send. If you choose to, and I really do believe most financial institutions will be receive only at first. If you choose to, though, you want to add in that send, well, the liquidity management tool is there to assist in making sure you have money to send, because the way it works is you can't send money you don't have. Don't you wish your account holders would go by that philosophy too? Well, that's how the financial institutions in this network are going to work. You can't send money you don't have. So to make sure that you do have money available when FedWire is not available, because FedWire is actually what is used to put money into Fed master accounts, I'm getting a little technical here, for the sending purpose. I just want you to be aware of when FedWire is not open, not available, so we're talking Federal Reserve holidays, we're talking weekends, we're talking late night. There is a liquidity management tool that is there to allow financial institutions to be able to support each other. There's other ways that financial institutions can support each other too, and that is in actually accessing FedNow. Because to access FedNow, you can go about it like this. You go in and you have a direct connection yourself. You manage it yourself. 24/7, 365, you are responsible for making sure that there is money in the account for send purposes. You are responsible for making sure that your connection is up and running. Or you can go through a third-party service provider, or you can go through a correspondent bank, which could be a banker's bank or a corporate credit union. But if you want to be on the FedNow network, you got to take one of those options. You got to have a connection of some sort. Well, what about my businesses? What if I'm actually a third-party provider of some sort in the network? Well, then businesses, consumers, account holders, they will, of course, go through financial institutions. This is a network that is only allowed for financial institutions, but it is from the Fed. So all financial institutions that use Fed services, you can connect. Let's stop and let's look at how do you connect through other services? How do you connect via ACH? How do you do your check processing? What's that look like? It could be the same, it could be different, but it all goes through somebody, somehow, for it all to take place. With FedNow, somehow, either through another financial institution, through a third-party service provider, or directly connecting yourself, you got to be connected to the network for it to be able to work. All right, what's next? The types of payments. This is a big one. Is this going to be only for certain things? Well, those certain things would be P2P, C2B, C2G, G2C, B2C, B2B, B2G, and any other two letters that you want to put together with a 2 in the middle. Because it really comes down to every payment, as long as it's domestic, I got to stress that, domestic only payments, they can be used in FedNow. You know, one of the things I love about FedNow, do I have any AAPs in the house? AAPs, how many SEC codes are there in the ACH network? Anyone? 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 23, that's a lot of SEC codes. You know how many SEC codes are in FedNow? 0. No SEC codes. Well, how do we know what type of transactions taking place? It's based simply off of who's sending and receiving it, the account types that are used. So what is not allowed? That's an easier question to answer. Foreign transactions, that's not allowed. And I will have to say, both the sender and receiving financial institutions have to be on the FedNow network for it to happen. But otherwise, every type of payment's allowed. In fact, on that government thing, can I just mention something to you? The U.S. Department of Treasury officially announced last year that they were participating in the FedNow pilot. And I got to tell you, my organization, we are part of the FedNow pilot. Now, I can't tell you what actually goes on in there except for what's been made public knowledge. And it is public knowledge that the U.S. Department of Treasury, Bureau of Fiscal Service, you know, that organization that sends all these government payments, they are part of the FedNow pilot. I can also share with you when it comes to government transactions that in the official release of FedNow, there was a press announcement, went out, got a video on YouTube about it, that in the official release for FedNow coming out this July, U.S. Department of Treasury will be participating. What's that mean to financial institutions? To me, it means I would want to have a plan in place to be able to receive government payments. But let me further clarify this before everybody's panicking and going, oh, we got to go sign up now. I do think you should sign up now. But however, Treasury has not said what they will do, and there is no requirement that you go do something. It is just something I want you to be aware of, that they are participating, moving right along. What are the benefits of FedNow? Why would people use this is really the answer here. Liquidity risk, already went over it. It's non-existent because liquidity settlement takes place before a transaction is actually processed and available. There is certainty of payment. Because of the messaging system in ISO and the way it works and the high speed that it evolves, We know whether or not a payment is going to be there. It's irrevocable. Some of y'all just went, wait a minute, you telling me that's a benefit? Well, I am, because we've got to have certainty of payment by having irrevocable. I can only know with a guarantee that that payment has been made and will be made immediately available to the receiver. And on the immediately available, it's in a few seconds. Actually, it's within about a minute or two, no longer than that though. Nobody has officially defined the immediate funds availability. But on this certainty of payment, we have to know it's irrevocable. And some people are like, I'm done, I'm out of here, I'm not gonna do that. But you already do, don't you? There's this thing called wires. They're irrevocable too, aren't they? So haven't you already worked in a payment system that's irrevocable? And correct me if I'm wrong, but my understanding is once you sent an ACH file, you can't cancel it. But you're going, wait, we can reverse it. Well, FedNow does have what we call a request for return. There is an option to actually do very similar to a reversal in ACH, a request to get something back. And it's done through the network. You don't have to pick up the phone and call like you do in a wire. The request for return is a request to the receiving financial institution to say, hey, we sent this in error. This is a duplicate. This is a mistake, or we just want it back. Now, full disclosure, the request for return, just like an ACH reversal, is not a guarantee you're going to get the money back, but it does exist. It is there. It is available. These things are high speed. They're convenient. They're any day, all day, every day. Wait, I just realized I didn't tell you on that send part where you can have the lower limits, that send part, you also control the hours for sending. On that 24/7, 365, that's receive. You have to be able to receive at all times. That's a requirement for the network. But on the send side, if you want to only send during certain hours, that's up to you. But the receive, you have to always be able to do. So it's speed, it's convenience, it improves cash flow. That's a huge benefit for consumers, for businesses as well. I've had some people tell me businesses aren't going to use this. Oh, I would love to have that discussion, but we do not have enough time because there are so many businesses that are actually out there already researching, working with some of their treasury management platforms, because there's some treasury management platforms that are already on top of this because they realize the benefits it will bring them. And it makes it easier just to manage your finances. I did mention the CFPB before. I did mention that I think that we will see it goes from due date to due time because it does provide advantages for the everyday consumer. And immediate funds availability, let's talk about immediate funds availability. Yes, it does have to be done. Yes, it is going to be a requirement. And no, it has not been officially defined. For those of you who love to read federal regulations, raise your hand in the house, my people. Oh, I'm probably alone on that one. If you go read Regulation J, Subpart C, which was updated May 22nd of last year, yeah, I know the date, and I was the guy that when it came available, I read through every bit of it. And when you read federal regulations, if you're interested, let me highly recommend that you always read the commentary with it. In fact, I got to give kudos to the Federal Reserve on adding the commentary to Regulation J, because in the commentary, they specifically state that they will not put a time frame on what equals immediate funds availability. They kind of addressed it. It's we'll know it when we see it type situation. I'm telling everybody, I think 2 minutes might be absurd, but no more than 2 minutes. I would really want to make it under a minute, and it should be within seconds. In fact, if we go to the slide, it says in near real time. Now, the reason that the commentary did not address it was to allow for changes in the evolution of technology. They actually specifically state that. It is because of changes in the evolution of technology we have the ability to even offer FedNow today. I mean, could you, and y'all remember the days of dial-up? There's no way we could have done this then. I mean, I remember struggling with getting people online with ACH platforms that I supported at that time. Yeah, I've been around for a while, let's just say. Well, other things we need to take into consideration. What if we look at it compared to other systems? I think I heard Venmo, I heard Cash App got mentioned earlier. What if I told you Venmo and Cash App, they're going to probably make use of FedNow? Let me clarify that statement real quick. Venmo and Cash App will make use of FedNow, my opinion. Nothing's been said, my opinion, because in Venmo, in Cash App, people also need to use money in that, we call it closed loop system. Venmo, Cash App, it's closed loop. You got to download the app. You got to have, set yourself up within that app, kind of like a digital wallet. You take money out of your bank account, out of your credit union account, you put it into Venmo, you put it into Cash App, you exchange it then within users within that closed loop system. And if you need to get the money back out, because the money's not safe, it's not protected, there's no FDIC insurance there, it's not making money for you or for them. But if you want to get that money back out, that's where FedNow would be very handy. In fact, I know a couple of these types of systems use the RTP network now to be able to move money back out, to be able to transfer it back to the financial institution, and in some cases transfer it from the financial institution into the closed loop network. See, those are closed loop networks. Those are closed loop systems. FedNow is an open loop system. It is open and it is available to every single financial institution in the US. Again, I got to stress these are domestic only payments, but it is available to everybody. Again, comparing it to other systems. What if we look at same day ACH? What about MasterCard, SIN, Visa? What about RTP? What about wires? Well, each of these payment channels, each of these payment systems, they have their own unique characteristics. I even do a session that is an hour long, which I'm telling you because I don't have enough time to do full comparisons of everything, that just deals primarily with RTP versus FedNow versus same day ACH. And people ask me all the time, well, which one do I go with? And you might not like my answer, but my answer is I would definitely go with same day ACH, probably RTP. I said probably, that's up to you, but definitely FedNow. And there are characteristics that between all of these different systems that you really have to stop and make the business case for your institution. I've been doing this long enough to know that every financial institution, you're a little bit different. There might be two of you online here that you're the same asset size, you got the exact same customer base, you got the exact same software platforms. But when we go into the minutia of what you do, there's differences. So my answer in comparing these to others is there are similarities, there are differences in how they work, and you'll want to find what's best for you. However, I do believe without a doubt, I'm putting all the money in the bank betting on this one, betting on the house right here. FedNow is going to pretty much dominate. I said dominate a lot of these networks. I do not believe, though, it will take away from same day ACH. I said take away. In fact, I have a friend with Lippis Advisors does a presentation that shows data from around the globe that shows ACH transaction volume continues to rise, even though instant payments are available. But the instant payments, they rise right along with it. So there's definitely demand. But why FedNow? Why do I care? Why is even the Fed doing this? Well, in creating and establishing this system, they are making sure that we have, well, global competition in many ways. Again, these are domestic payments, but if you look at what's happening around the globe, if you're following the trends, 70 systems out there already, 70 systems out there, countries supporting instant payments. Some of you might be going, yeah, but they just started doing it. No. Some of these systems go back as far as 1973 in Japan. The UK, 2008. A lot of these systems have been around for years, decades even. So this allows us to be more competitive with the global network. And spoiler alert, some of these other not US, other payment systems, they actually do cross-border instant payments. That's a presentation for another day. Other things we'll be looking at. It gives us stability in the times of crisis. I got to go ahead and tell you, I had people say when we started hearing about, you're not going to like this, the bank failures, would FedNow have been of any help? And the answer was yes, because there's no wondering, is this wire going to clear? There's no wondering, is this ACH going to clear? There's no wondering, will this check clear? It either did or didn't. Money was either there or not available. Because with FedNow, it is instant settlement for it to be able to take place. Again, that liquidity risk is gone. And having the multiple systems does help us in case one system were to ever go down. There's redundancy. And I got to say, it's a fact too. The Fed's got the reach. RTP's got more accounts. I will tell you that too. They have a majority of the consumer accounts, but the Fed's got more financial institutions that they reach. And I tell you that because you know what? You can be on both networks. You really can. You want to be on both networks? Go ahead. Nothing stops you. That's an option that's available to you. Which one's better? That's up to you to decide. But question does come up though, then how do these payments actually flow? What makes them unique? What makes them different? And I'm going to tell you the truth is, if you understand what we call the four corners model, every transaction, it doesn't matter the payment channel, every transaction really starts off with somebody wants to send somebody money. They go through their financial institution. We usually call it a sending financial institution, or the ODFI and ACH. It goes through a network operator, a system that controls it, the central bank, something like that, to a receiving financial institution, to the receiver finally getting their money. Every payment system pretty much works that way. We have different terminology along the way of the people involved, but every system pretty much works that way. So if we look at a Fed's payment, you got a sender, they want to send money to somebody. So they provide the payment instructions, the payment message to their financial institution via an app. FedNow will work through an app, through your bank, your credit union's app, or online application. It could be, you know, I get on my computer, I get on my phone, either way, I send money. That money then goes to the financial institution, and the financial institution then submits it to the FedNow network. Very important right here, what just happened. Because these are really fast transactions. In fact, they are less than 20 seconds. They have to be less than 20 seconds because there's what's called a timeout clock, and it times out after 20 seconds. Truth is, they're going to be less than 5 seconds, if not even, fast. And that clock, you're probably going, man, I'm afraid of that clock. Well, that clock doesn't start until it enters the FedNow network. So when you go from the point of your account holder putting something in the app, your account holder putting something online saying, I want to send this immediately using FedNow, the clock doesn't start until you take it and put it into the FedNow network. Now, why do I tell you that? Because you can do screening beforehand. You can check and make sure they got the money if they're sending, you know, to be able to actually send it. You can check against limits that you have set for them before the clock starts ticking. That's before the clock starts ticking. But once it's in the FedNow network, that clock is ticking. And the FedNow system is going to validate the format of the message, make sure everything's good. The FedNow service is then going to send a message to the receiving financial institution saying, hey, are you going to take this transaction and make these funds available? They didn't send the money yet. They just said, hey, receiving financial institution, will you take these funds and will you make them available to the receiver? This gives the receiving financial institution, which could be, will be you, the ability to be able to look and go, do we even have this account? Or also, if you want, you can do some additional screening. I said, if you want, I didn't say you have to, but if you want, you can do some additional screening. But you get to make the decision and you report back to the FedNow service and you say, guys, yeah, we're going to take this, or no, we're not. And there is an option called accept without posting. That's an exception. Accept without posting is if there's an issue, more so than what we can go through in this particular presentation. Just got to go ahead and tell you that right now. And a lot of things to go. Now, I do have a question that's come in. Have you seen banks addressing instant payments from an OFAC sanctions perspective? You went there. I love that question right there. Let me go ahead and we're going to hit it. We're going off subject here for a second. We're going to address that question right away, because on that send side, that is probably important to you. How many of you are terrified by OFAC sanctions? That would be me. You can put me down twice for that one. Heaviest fines we've ever seen in the industry come from OFAC violations. So let's address that. Is OFAC screening required for sending and receiving FedNow transactions? The answer is no. I got an entire class on the payments professor for this one to address everything about you need to know about OFAC and faster payments. And I'm going to sum it up for you right now. The answer is no. However, I want you to know that if you go read the actual FedNow Service operating procedures, get the most current version, you'll want to go to section 3 on compliance. And there's a footnote. I mean, I'm not kidding, a footnote. You got to read everything. Like I said, that commentary in Reg J, in this case, read the footnotes and the operating procedures that says the FedNow service does not require live screening of transactions. When we look at OFAC, you do have to follow OFAC procedures. You do have to have a compliance program in place. The RTP network even says in their rules, you must have a written compliance program. But again, no screening requirement. So what that means is it is optional, it is up to you. But if you do screen, or if you do suspect a transaction, that accept without posting is for that exact purpose. The accept without posting allows you as a receiving financial institution to have this transaction come in, be able to put it in that holding area without making the funds available, so that you can do your investigation. And in fact, the ISO messaging system has additional messages that allow you the ability to communicate back and forth to the sending financial institution of the status of what's going on while you complete your investigation. Now, there are some time frames that are involved, but if it involves OFAC, your time gets extended. All right. Question is, how much screening will be available direct with the Fed? Okay, that's a great question right there too on OFAC screening. You're probably thinking fraud screening too. And my answer to that is going to be, that's not something the Fed offers. The Fed will monitor for fraud. There are fraud reporting requirements within FedNow that are different than what we see in other systems. And they will be monitoring for fraud. They will be overseeing the network. They will be making sure it's safe and it's secure as much as they possibly can. But they do not actually do the screening themselves. If you want to be able to do OFAC screening, you want to be able to do fraud screening, I can only speak from the perspective of what my organization does. We do offer some of those services, and we do offer you to be able to connect to anybody who offers those specific services that you may be using to connect with the system itself. So there are ways for that to be accomplished. Now, you haven't asked it yet, but the next question comes up. If these transactions are taking place in less than 20 seconds, is that enough time to even do fraud screening, to be able to even do OFAC screening? And the answer is absolutely yes. Believe it or not, yeah. You got to realize 20 seconds to humans, that's not that long. 20 seconds to computers is an eternity. No, just about. It's more than enough time if not required, if you want to do all of that screening. It is possible, it can be accomplished. Great questions. Thank you guys for those. All right, what happens next in the transaction? When the financial institution sends a message back saying, yes, we are going to accept it, even if it's accept without posting, then the Fed service immediately does take care of and does do the settlement. And I see another question's come up. Let me finish the payments flow and I'm going to address that. Then what happens? The Fed service does the settlement. The Fed service then releases message to both sides, to the sender and receiving side, to let them know, hey, this transaction is taking place. Hey, settlement's taking place. And then finally, number 8, the receiving financial institution has to take care of it. All right. So next question was, how many parameter features will be available from the Fed to alert the FI? I can't answer that with confidence because I'm not exactly sure exactly what parameter features will be available. I do know that things that they will be looking for that will be alerts will be like velocity and dollar amounts that are out of unusual activity. Now, how to get to that unusual activity will require some benchmarking to be done. And it is very similar to the same things that individual financial institutions will have to do. So the parameters that they will be looking at will be if they see what they consider to be unusual activity as far as velocity and dollar amounts. Also, a new, let's say, parameter that is going to be working here will be that there is a requirement from the sending and receivers to make notifications and report fraud activity. I mean, that's not really that new because if you do have certain losses, certain things taking place in other payment networks, you know, FinCEN, BSA, AML, there's some requirements there. In this case, though, it is a network requirement that you do have to report fraud activity. RTP has it as well. So the Fed system, you will have to report fraudulent activity. So that's like a new parameter. And if they start to see any trends, then they can send out broadcast messages to alert the network of what's going on. Another question, how do I see banks addressing instant payments from an OFAC perspective? I think I did answer that, but my answer to that one is going to be, a lot of it goes back to, like I said, I got a whole course on this. The OFAC program that you have in place, the level of risk of who you are operating with, and what it presents will then determine the level of if or when you actually screen. So again, every financial institution is a little different on how you handle that, but the higher your OFAC risk, the more likely you will implement screening on sending and receiving. The lower your OFAC risk, the less you're going to have to worry about that one. Opinion-based, you always check with your attorney, accountant, or tax professional. All right. Now, a couple other things to be aware of when it comes to FedNow is, I've already said this one, is there's the receive only option, but what I want to get to here is, and I mentioned this in the liquidity management too, there are two types of transactions that really take place. There is your customer, your account holder sending credit transfers, and there is the locate the training I'm referring to. My contact information's in here. You'd have to actually email me about that one because it is like a super brand new course because it's a super brand new topic, but we'll get to that. And Saltmarsh could probably help you with some of that too, I would assume. Now, there are two types of transactions though, the customer credit transfer, the FI credit transfer. The customer credit transfer, that's easy. That's what we're going to see the most of. That is just people or businesses sending to another person or another business. Could be government too. The FI credit transfer, those are the transfers that are used to be able to support each other to make sure you have money available for sending. It's really not that complicated. It's new, but it's not that complicated. Those are really the two main types of transactions we see. So as a customer credit transfer type, in other words, as a financial institution that is going to be part of the FedNow network, how do you operate? Well, you can be receive only. I recommend you start off as receive only. I recommend you get comfortable with receiving FedNow transactions, and then you can expand to where you send and receive. But the curveball I'm about to throw you here has to do with the RFP when it comes to sending and requesting RFPs. Now, I already explained an RFP is taking what is classically been a debit. It's taking what is normally been somebody coming in and taking money out of an account, hopefully authorized, better be authorized, but taking it out. And what I do, my account's just sitting there. Somebody took money out of my account. Could be fraudulent, could be, hey, it's a bill being paid. And it's going to flip it to where I get a message going, Kevin, your Harley Davidson payment is due right now. Do you want to pay that? Absolutely, I do. And I can click on it and make sure my payment goes through. But I click on it and I respond by sending a credit push instead of the debit actually coming out. Those of you, again, who do disputes, do you see how that will just totally change dispute processing? I didn't say take it away, but it will change it. It will really revolutionize and change how dispute processing takes place. So that's my little bit of a curveball. Something else I got to get across, though, that is going to be very important. Hold on. Really good, great question. If we want to participate in FedNow, does our core processor also have to participate? Okay, this is a tricky answer. What and let's hear the question again. If we want to participate in FedNow, does our core have to participate? What has to happen, what has to be available is your incoming received FedNow transactions do have to post in that short period of time, that less than 2 minutes. I mean, that would be the longest, which does, in my understanding, require your core to, let's call, play nice. Now, in saying that, hey, yes, your system has to be able to post, make the funds available in that immediate definition, I am not saying that your core has to be ready. I am just saying that it has to happen. I will tell everybody you should talk to your cores, talk to the service providers that are out there, and always ask that question. If it's a third-party service provider, how are you going to hit my core? Are you, actually certified for hitting this core? Because I do know, again, as a third-party service provider working with a lot of different cores, there are some core systems that are out there and they're ready to go right now. They got it. They're ready. And there are some core systems that I've gone and talked to, and I kid you not, even this year, and they've gone, what's FedNow? And I'm like, oh my gosh. However, I know that there's still things that can be done. It doesn't mean just because you talk to your core and they're not ready, doesn't mean it's not possible, but it is without a doubt something that's got to be answered. In this case, the question did mention a specific service provider, and I can say that for the person who asked that, yes, that specific service provider, they're ready to go. They're actually offering certification to other third parties that are out there to be able to make sure they're ready to go too. And I'm not going to answer it for everyone publicly, just cause I know some are not, some are ready to go. That would be one you can get with Saltmarsh or me if you know, and I could tell you, but the better thing to do, the better thing to do is talk to your own core provider and see what they got to say. All right, you also got to make sure you got money available. So managing expectations for sending transactions, this is going to be critical. For sending transactions, you got to have money there. You got to meet basically the PSR, payment system risk policy, for intraday credit and negative balances at the close of what's called a cycle date. What's a cycle date? It's really a FedNow day. We'll get to it. So additional participation types I just want you to be aware of have to do with whether or not you're going to do liquidity management, have to do with whether or not you're going to offer requests for payments. So there is the basic send, the basic receive, but there is the additional things to consider too, as far as, okay, am I going to work with another financial institution and offer liquidity management services? Like that's above and beyond basic FedNow. Am I going to offer requests for payment? Will I be able to receive requests for payment? That's another good question for your service providers and cores too. I already know that there's some out there that they can do the receive, but they can't do anything else yet. I know that there's some out there that can do send and receive, and then I know that there are some out there that can do RFP. So you want to make sure what capabilities do you want to offer? I mean, that's real important in a strategy, payment strategy. You got one, right? I hope so. Other things is settlement. During onboarding, you will define what routing numbers are going to be used, which is really just the master account that's going to be used for settlement to be able to take place. It can be yours. It can be a secondary routing number if you have multiple routing numbers. It could actually be a correspondence too. You can use somebody else's account. They got to allow you. I mean, it's not just like, hey, I'm just going to pick this account and all settlement takes place from it. No, it's got to be legit. But during the onboarding process, something to plan for is making sure that you understand how you want and where you want settlement to take place. Next question comes up going, probably, who's going to balance and manage all this? Well, I don't know who's going to actually balance and manage all this, but I do know that you're going to have to balance and manage all this. And there are some reports that are available. There are messages that go back and forth all the time. One of them tells you your account balance at any time. You can actually ping the FedNow network at any time to know what your account balance currently is. So you'd know if you need to put money in there. But the messages that are also important are the messages that let us know that settlement's taken place. So you will receive these advice of credits and these advice of debits or notification of debit messages for the Fed level master accounts to let you know that these transactions are taking place. Financial institutions, like I said, you can do balance inquiries at any time to be able to account for all of this. And something else too, there's reporting features galore. There are reports that are going to be able to help you to be able to handle this. Fed has created some new reports. There's an activity details and an activity totals report. The totals report, it is a report that is going to give you summary information for what we call a cycle date. And a cycle date is just basically a specific time frame at 7 p.m. Eastern to 7 p.m. Eastern every day that FedNow works. So that's a cycle date or a FedNow business day. And there's reports that are available at any time, the activity totals, activity details. Details tells you everything, gives you the details. You can request those reports at any time. And at the end of the cycle date, those reports can be automatically generated and sent to you. On top of that, FIRD, SASF, AMI, you know those terms? Well, those are existing reports already available for other Fed services that you can now incorporate. If you're using them, you know them. If I mention them and you're using them, you know those. If you're not, there are additional existing reports, is my point here, that are out there that are available that will incorporate FedNow data. My thing that I want to get across is reconciliation, balancing, all of that. It's going to be a little different, but in the same way, it's still balancing and managing an account. There will be all kinds of reports that are available, some that are existing that you'll be able to incorporate in, and then some that have been built specifically for FedNow and the FedNow network. And in addition to that, there's your software provider. Your software provider will have their reports and their mechanisms to be able to aid you in that reconciliation process as well. That's probably another important question to be able to ask on how's that work, what's going to be done there. So my point, you got to balance and reconcile all this. The difference is it is also going to be on the weekends. Oh, now I don't know about you, but I got in the banking industry because I learned about banking hours. I was like, wait, they only work Monday through Friday and 9 to 5. I'm in. That has dramatically changed, at least in my career and over the past couple of decades. But it is, you know, something you got to consider. Now, big thing on this I want to point out yet again is on the send side is where you got to make sure money is available. Receiving, you're just receiving money. It's coming in. You got to make sure it can post to your core system, to the account, be made available immediately, of course. But you don't have to have money available to receive. You just have to have it available to send. And you control when you do or don't offer that part. Now, another, and let's call it fun part of all payments is compliance. You ready for this? What does it mean to actually have a compliance program for FedNow? Again, there's a lot more to this, but what I'm going to get to here is let's look at some of the general things that apply to FedNow. First of all, Reg J. Reg J really made FedNow. Subpart C is specific for FedNow. It is what gave the Fed the ability to create the FedNow service and also to create an operating circular for it. Operating Circular 8 is specific to FedNow. Operating Circular 8 addresses FedNow. I mean, it is very long and it's not the most fun thing to read because it was definitely written by a lawyer. Operating Circular 1 and 5, not new. Those are used in other payment channels as well. They deal with master accounts and electronic access. Regulation E in the CFPB, talking about another whole additional course. Oh my gosh, yeah, that one is there. And this one comes up a lot. Does Reg E apply to FedNow? Well, to answer that is this question then. Answer this. Does FedNow equal to be an EFT, an electronic funds transfer? Answer is yes. Are consumers involved? Yes. If you have an electronic funds transfer and consumers are involved, Reg E does apply. Guaranteed. So as you go on board, and I really do believe every one of you at some point, sooner or later, are going to be part of the FedNow network. That's my personal opinion and belief. As you go on board, you will need to have disclosures, agreements, and a dispute process. Talk to Saltmarsh, I know they can help you with that, to make sure that you are in compliance with Regulation E. It definitely does apply. And there's some FAQs, some other information as far as how it applies to instant payments that are out there too. Okay, what about UCC 4A? Those of you in the business world, I want you to know UCC 4A, I'm going to throw you a big curveball. It definitely does apply to businesses, but I'm going to throw you a curveball here. If you go read Reg J actually says UCC 4A applies to all FedNow transactions. That includes consumers. It does further state, remember that commentary I told you to read, it does further state that in ever there's a dispute, Reg E will always win over UCC 4A. So do be aware of that. What other things do I have to account for? OFAC, we already talked about OFAC, but what about risk assessments? Yes, risk assessments, audits, most absolutely has to be done. Jason mentioned that earlier too. Saltmarsh there to be able to help you. You'll want to definitely be doing a risk assessment. I mean, nothing is written down that says, hey, you got to do a risk assessment for FedNow in FedNow literature, like in this operating procedures, it doesn't say that. Operating circular, it doesn't actually say it. It's just one of those things that we know in the banking industry. We know if we're going to offer a new product. We know if we're going to offer a new service, or in this case, a new payment channel. A brand new payment channel, which will equal to new products and services, lots of them. Use cases, oh, I could go off. That's a whole hour-plus long presentation in itself too. New products, new services, new payment channel, risk assessment is going to be required. What about an audit? Well, there is the Fed Security Assurance Program, which is required for Fed activity that must be met for FedNow as well. Do you need to do above and beyond that? My answer, my opinion, yes. You will want to do that as well. But there is no actual audit requirement beyond the Fed Security Assurance Program that has been written into any of the literature, the official literature that is out there for the FedNow application and service. All right. Do we have more questions coming in? How much automation do you think will be connected to the reconciliation and posting for the weekend days? Okay, that's a really great question. That is a question that actually segues great into my how do we prepare now. I would talk to my service providers on that one when it comes to what will be available for reconciliation and posting on weekends. Again, I can only speak from what I know for sure from my company type's perspective. We actually offer a service to do that for you over the weekend, that we can monitor everything for you on the weekend, send you alerts that are as necessary. Is every service provider out there doing that? Not that I'm aware of, but I know a couple others that are. So you would want to talk to them and see what's actually out there and available. Some of them will, send alerts directly, but not actually monitor it so much. You can set what we call watermarks, high, low watermarks, to be able to tell you, hey, you got way too much money in this account. You might want to move it out. Or, low watermarks, you're out of money. You can't send anything more. You want to put some more in. So that is available. The reporting features and how those will work, it also is a case of talk to your service provider to see what's available. So in preparing for FedNow and how you prepare, it is conversations galore. One of the first ones, though, is the conversation you have with yourself, the conversations that you have internally with your organization. Where are we at? What's our payment strategy? What's it look like? If you need help building the payment strategy, trust me, there's plenty of resources that are out there. But you also want to do like you're doing right now. Kudos to you for being here and learning more about faster payments. You'll also want to, oh wait, I already said this. I'm saying it again, build a strategy. Again, there's ways that can be done, lots of assistance. And get to know your stakeholders. Now by this one, what I mean is, for those of you who are on here and you're the only person from your organization, please take this information back and share it with others. Share it with senior management. Share it with other departments. To really build a strategy, I'm kind of getting into building a strategy here, you want to be able to bring in all those different people. You want to be able to bring in all those different departments to be able to see how's this going to affect everybody. Wait, that's how we do all of our products and services. That's right, good for you. All right, another one is talking to your account holders and listening to them. What are they saying? What are they asking for? I love to ask this question, especially in person. By a show of hands, how many of you have account holders, business or consumer, that are coming in and saying, we want faster payments? Raise your hand. And not many hands actually go up. They do, some now. There was a time no hands went up. Let me rephrase that question. How many of you have account holders, business or consumer, that call in and go, where's my money? When's this check going to clear? When will this payment post to my account? When will I be debited for this? Heard those questions? That's those people having in their own way saying, we want faster payments. And FedNow will be able to solve for that. And right now, this is where I usually say, hey, I am Kevin Olsen. I'm the Senior Vice President of Payments, Innovation and Strategy for Pigeon, all over the place when it comes to social media. And I would say class dismissed, but class, do we got any questions that haven't been answered? Jason, you can come back on too if you'd like.
Hey, Kevin, it doesn't look like any more questions have come through, but Jason, do you have any questions you want to ask?
No, I think you gave us a lot to consider. There's the implementation process of how do we handle it from an accounting perspective? How do we get it in our institution? How are we going to play with it? Are we going to push, or are we going to receive only? What's our process there? But I would say, Kevin, just one time to reiterate here, I think we're both in agreement that whether or not you want to play nicely with FedNow, you're probably going to be pulled there. So it's worth educating yourself and thinking about it, at least knowing what's going on out there. Stay tuned, stay connected. You mentioned the Fed Assurance Program. they do have a requirement. You're going to do some review. It can be internal, but you're going to do some review of the process and get comfortable with it. Read this operating circulars. You basically, by having the account with the Fed or agreeing to do the things that are in them, great place to start kind of reading and understanding. But, to be continued on how Reg E applies. It's interesting that FedNow says, or that the Fed says we won't comment on it, right? That's the positive of having you here versus the Fed.
I got a class all on just that too, because
Yeah.
it's such an intricate topic and so much details go into it.
And I think it makes a lot of sense that we're going to be learning how to do some of the things we've been doing a little bit faster than we've done them in the past, and just slowly we're going to be pulled into an instantaneous kind of payment world, I think, right? I mean, it kind of seems you see it overseas, you kind of understand how I think a business is that RFP to me is a very powerful, the request for payment. It's a very powerful
bill pay. I mean, people don't realize that this is one of those, we will look back in probably 5-10 years and go, wow, I can't believe we used to do it that way. Because let me ask this question to the audience, because you're probably thinking this, can I make money off of FedNow? That's a big question, right? As a financial institution, you got to invest to be able to start offering this product and the service. And I'm sure your senior management, your CEO is going to go, well, we make money off of this. My answer to that is absolutely you can make money off of this. Because let's just take the RFP, for example. And any of you who offer bill pay services, what's that cost? What's it cost for that business to be able to get an envelope, put a stamp on it, print it out, mail it out, receive, the statements back, do the reconciliation process there? It's real. The remittance is not fun. Imagine if you flip that over to all electronic. Now, I said all these costs that are here. I didn't say you flip it over and offer it for free. We're talking now, it's an enhanced service that you're offering, enhanced capabilities, real-time cash management, monitoring and flow, well above and beyond the classic paper days. Who wouldn't want that? And who wouldn't pay for that? That's just one of many examples.
So with that, if we don't have any other questions, Nancy, I think we'll give people back about 13 minutes, looks like. We appreciate everybody joining us.
We actually just got one question. I'm sending it over to you, Kevin. You might be able to answer it now or maybe later.
That is a good question. Okay, the question is, if we already are using the FedLine program, but don't operate on the weekend, will we most likely need a third party or correspondent bank to work on the FedNow environment to ensure we're able to handle 24/7, 365 processing? You're gonna love my answer, maybe. Okay, if you're going to send, there's no doubt the answer to that is 100% yes. If you're going to send, somebody has got to be able to monitor to make sure that money stays available to send. Otherwise, you will risk that there's a potential possibility that you'll have a customer, an account holder who tries to send and can't because there's no money available in your master account. On the receive side, you still want to be able to monitor it. I mean, don't get me wrong. You would still want to, because, on the receive side, if, for example, you have one customer who receives 10,000 transactions in 3 minutes, is that a red flag? That's a huge red flag to me, right? That's an abnormal activity. Granted, I think Fed would be on top of that and calling you too. However, you'd want to be aware of those crazy situations. So my answer is most likely, yes, you would want to have either somebody assigned to monitor it from your institution, or yes, you would work with the service provider that has some type of alerts that can get to somebody to be able to address any of those potential issues that could arise.
Well, awesome. We don't have any other questions right now, but we want to thank you so much for joining us, Kevin, and it was very informative. I'm sure everyone's learned something. And like we mentioned, today's webinar was recorded, and so everyone will receive a link to that recording and to the slide deck by the end of the day. Make sure to check your spam or junk folders in case it lands there due to security filters. And just another reminder, on your way out of this webinar, please take our survey. We would like to get your feedback on today's presentation, and we have some other questions about FedNow in there that will help us kind of get to know our audience a little bit better. But thank you all for joining us, and we'll see you next time.